Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome to episode 12 of season 2 of the Caribbean Business Review. I'm Joseph Cox. Well, thank you as always for your continued support across our digital platforms and on MKR Radio. Our special guest this week is Deodat Maharaj, Managing Director of the UN Technology Bank for Least Developed Countries, as we tackle a critical question: why the Caribbean is still not ready for the AI era and what must change. And in today's CBR briefing, we break down the economic signals you should be watching after Hurricane Melissa, Jamaica's true fiscal exposure, why electricity restoration now defines the pace of recovery, the emergence of a two-speed tourism rebound, and how diverted winter demand is already flowing to the Dominican Republic and the Bahamas. Our new midweek series, the CBR Intelligence Notes, is also live, delivering deeper, data-driven insights every Wednesday. Look out for the next edition. But before we begin today's briefing, we need to address a widespread narrative: the claim that Jamaica's economy is heading for an 11 to 13% collapse in the fourth quarter. However, a more complete reading of the post-Melissa economy shows that this projection is significantly overstated. Hurricane Melissa made landfall on October 28th, meaning nearly 1 month of Q4 operated normally. Airlift recovery was rapid. Norman Manley and Ian Fleming were back within days, and Sangsters International was fully operational by November 1. Manufacturing and port operations in Kingston remain intact. Early reconstruction began in November, and distributive trade has surged, consistent with the 10% spikes historically seen after Hurricanes Ivan, Maria, and Dorian in our regional counterparts. And critically, December, the Christmas holiday period, overlaps with Jamaica's strongest annual spending cycle, driven by retail, wholesale, remittances, and services heavily concentrated in Kingston and St. Andrew. Tourism is also recovering faster than feared, with 60% of hotels already open and 75% expected by mid-December. Taken together, these buffers point to a far more realistic contraction of 5.5% to 8% and not the double-digit decline initially projected. Yes, the economy is under strain, but exaggerated forecasts only distort public understanding and hinders effective policy formulation. Now, with that clarity in hand, let's turn to the stories we are tracking this hour in Market Watch and Global Pulse. Coming up in the Market Watch, Jamaica's economy poised for a sharp decline in Q4. Guyana injects $1.5 billion into banking system, and Bahamas unemployment falls to 9.3%. Then in Global Pulse, UK Chancellor unveils a £26 billion tax-raising budget. Canada avoids recession as the Q3 GDP surges 2.6%, and the U.S. deficit rises to $284 billion in October. All that and more this hour on Market Watch and Global Pulse. Coming up next, it's a CBR briefing. Welcome to the CBR briefing. I'm Joseph Cox. Now, 1 month after Hurricane Melissa, the question is no longer what happened. We know the damage, we know the numbers, we know the headlines. Today, the real issue is how to interpret the new information and what it tells us about Jamaica's economic trajectory heading into 2026. Here are the 5 structural signals emerging this week. 1. Jamaica's fiscal exposure is far smaller than the damage headline, and that matters for creditworthiness. The Grid report estimates $8.75 billion in damage, but only $2 to $3.5 billion of that belongs to the state. This distinction is crucial. It means Jamaica avoids the type of fiscal collapse that follows public asset-heavy disasters. Debt sustainability is challenged but not destabilized. External partners see Jamaica as absorbing the shock without slipping back into fiscal crisis. The catastrophe bond plus CRIF plus IMF liquidity creates the fastest fiscal cushioning that we have ever had after a major hurricane. The analytical takeaway, Melissa, is a development shock, not a macroeconomic unraveling. 2. Electricity restoration is now the lead indicator for GDP recovery. The headline isn't the 74% restoration rate. The real analytical insight is that electricity has become the economy's bottleneck variable. Here is why. Manufacturing, hotels, water pumping, logistics, telecoms, food shortage, and distribution all move together with electricity. GDP contraction in Q4 will track power outages almost 1-to-1. The speed at which JPS can operationalize 900 linesmen will determine Q1 and Q2 2026 performance. The analytical takeaway, electricity restoration is now Jamaica's single most important economic variable. 3. Tourism is splitting into two economies, a competitive corridor and a reconstruction belt. This is not just a recovery issue, it's a structural transformation in real time. The competitive corridor, Ocherias, Negril to portions of Montego Bay, these areas have functioning airports, stable power, cruise arrivals, hotel stock reopening, the ability to absorb shifted demand. This corridor will produce the majority of Jamaica's tourism earnings over the next 6 to 12 months. The reconstruction belt, St. James West, Hanover, Westmoreland, these zones face supply chain delays, deep infrastructure damage, labor displacement, rising insurance costs, 2026 plus reopening timelines. The analytical takeaway, Jamaica is entering a dual-track tourism economy with asymmetric recovery and asymmetric competitiveness. 4. Regional competition is no longer a side story. It's a central economic risk. The Dominican Republic's approval of 800 additional flights is not opportunistic. It's strategic. Combined with the Bahamas' record Thanksgiving performance, the regional pattern is now clear. Caribbean tourism demand is not falling. It's reallocating. Visitors are not pausing travel, they are shifting to functioning destinations. Market share lost this winter may not fully return in 2026, and the DR has newer hotel stock, deeper Spanish capital inflows, lower operating costs, larger room capacity, more aggressive airlift negotiations. This is not a temporary advantage, it's a widening of a structural lead. The analytical takeaway, Jamaica's biggest risk is not hurricane damage, it's losing competitive positioning during the most lucrative travel quarter. And 5, travel behavior reveals something important. Demand for Jamaica remains strong, but confidence is fragile. Passenger traffic fell sharply in October, 74,300 fewer travelers. But the deeper signal is this. Most visitors did not cancel permanently. They shifted dates, rebooked, or moved within Jamaica. This shows brand loyalty, even amidst uncertainty. The real challenge is narrative management. The U.S. advisory urging travelers to consider rescheduling, mixed social media messaging, the perception created by the island-wide disaster declaration. These are not physical barriers, they are confidence barriers. The analytical takeaway, Jamaica doesn't have a demand problem, it has a communication problem. Pulling all these signals together, Jamaica remains fiscally stable. The speed of electricity restoration will define Q4 and Q1. Tourism will deliver uneven recovery. The regional competitive landscape has shifted. The biggest short-term risk is reputational. So Hurricane Melissa delivered the largest economic shock in Jamaican history. But the deeper story is this. Jamaica's recovery won't be defined by the damage, it will be defined by its competitiveness, its communications clarity, and how fast we restore the systems that make the economy move. Now, this has been your CBR Briefing. your market brief on CBR. In Jamaica, the economy grew 4.6% in Q3, but the PIOJ expects a sharp Q4, the contraction of 11 to 13%, even as the BOJ injects $3.9 billion in emergency liquidity to stabilize Western parishes where ATM access continues to be suboptimal. Jamaica's trade deficit is also widening, with imports rising 3.8% and exports declining 2.9%. In Cayman, Q2 imports climbed 10%, driven by U.S. price increases and population growth. The Bahamas recorded an unemployment rate of 9.3% in Q2, supported by tourism and construction gains. Meanwhile, Belize saw imports rise 8.6% and exports up 4.7% in September. Year-to-date inflation stands at 1.2%. Barbados tourism is up 5.5%, which remains US-led, with most visitors staying under 1 week. Grenada will make G-tax mandatory for all major taxes and licenses beginning January 2026. Ghana injected $1.5 billion US into its banking system to stabilize FX conditions, while the Central Bank of Trinidad and Tobago warns that its own FX support mechanisms are becoming increasingly unsustainable. The IMF has extended Haiti's reform program as the economy faces severe strain, and in Bermuda, authorities have flagged elevated money laundering risks in their latest national assessment. Now that's your market brief on Caribbean Business Review. For more, look for us on YouTube and Spotify.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Still ahead on Caribbean Business Review, our conversation with Deodat Maharaj, Managing Director, United Nations Technology Bank for LDCs, as we discuss Caribbean's readiness for artificial intelligence and meaningful innovation.
Public policy needs to be used to drive capital flows, private capital flows, and we don't have that incentive framework to crowd in investment at scale. So this is a good example and a good space where a couple countries coming together, Trinidad and Tobago, Jamaica, for example, another country in the region, maybe like Barbados, working together to get investment at scale where, because that's the challenge, the companies are not seeing the scale required to earn money. So two things we need to do. One, use public policy to create the incentives, and two, work together to generate the investment.
Welcome back to the Caribbean Business Review. This is a strategy deep dive, and today our very special guest is Mr. Deodat Maharaj, who is the Managing Director for the UN Technology Bank for Least Developed Countries. Welcome, Deodat, to the program.
Thank you so much, Joe. A great pleasure to be on this program. I'm so happy to engage with you and your audience. I think we're going to have a really exciting discussion. Thank you so much for having me.
My pleasure, my pleasure. No, the first question, I suppose, that I am obliged to raise with you is, what exactly is the UN Technology Bank? What does it do? What is the ethos of this?
Yeah, well, the UN Technology Bank for the Least Developed Countries was established as a consequence of the growing divide between developing countries and developed countries, but more particularly with respect to the massive divide between the least developed countries, or the 44 poorest and most vulnerable countries, and the rest of the world. And what the LDCs, or least developed countries, recognized was that if they proceed and achieve regular rates of economic growth, they will never catch up because they are dealing with a widening gap. And therefore, they had a view that one way to help them to, to leapfrog was leveraging science, technology, and innovation. So they were ahead of their time. Now, this was before the AI revolution in recognizing the value and power of tech and innovation in helping them to fast track their development. So the UN Technology Bank, we have one simple remit to leverage science, tech, and innovation to help the world's poorest and most vulnerable countries accelerate or fast track their development. For us at the UN Tech Bank, for the least developed countries, the emphasis obviously, given the fact of these countries face acute fiscal constraints, like in Jamaica and like the rest of the Caribbean, highly indebted, similar to the Caribbean as well, that technology and innovation, they must be about low cost, high impact, replicable, scalable solutions, not technology that you can't afford to carry on 5 years after the project has come to an end. So that's, in a nutshell, is the
Well,
work
it
that we
is.
do at the UN Technology Bank. We focus exclusively on the 44 least developed countries. We have 32 in Africa, 8 in Asia Pacific. We have 1 in the Caribbean, which is Haiti.
I would argue, are at real risk of being completely left behind. So
But
how does one treat with that?
yeah, but I think in terms of the Caribbean, Joe, I remember when you were at CARICOM, you put out a really excellent bulletin or brief showing development indicators in the Caribbean, which I found to be very valuable. And if you dig deeper into the indicators, especially in that technology space, some of the LDCs, a country like Rwanda, for example, is far ahead of any country in the Caribbean in the use of tech and innovation. And Rwanda is the least developed country. Rwanda, they're using artificial intelligence to help them manage the hospital supply chain. So drugs are not wasted, expired drugs are not in their inventory. Okay, they know exactly when to order. If you go to Rwanda, I was in Kigali or 2 to 3 years ago. They have a whole tech city, and where young people can go into incubators, they have an idea, they get supported, develop the idea, develop apps, etc. And my first posting in development was in Tanzania at the height of the genocide, right? So within one generation, they have transformed their development trajectory, and they have technology and innovation they have really used in a very powerful way. So I would argue that in terms of the Caribbean, there's much we can learn from an LDC like Bangladesh or Rwanda. And in that tech and innovation space, we have a lot of catching up to do. But the good thing, Joe, is that there are clear examples out there of what we can also do in the Caribbean to leverage tech and innovation to help fast track our development. Because in our situation in the Caribbean is that resources are finite, needs are unlimited, with acute fiscal constraints, high levels of debt. So for us, it's no different. We need to leverage tech and innovation to develop low cost, high impact technological solutions, whether it's in agriculture, whether it's in health, whether it's in climate resilience, whether it's in communication, or creating business opportunities to drive employment and economic growth.
No, I hear you on that, but this is one of the challenges that came out, for example, the case of Jamaica recently with the Hurricane Melissa, is that for the most adversely affected parts of the island, what happened was that the digital infrastructure just failed. It completely failed. So persons had no access, minimal to no access to the bank accounts. They were unable to conduct basic commerce, at least those without the requisite amount of cash, etc., etc. And what that has done, I suspect, is that it has put a bit of a damper on the appetite for these technological transformations. And one wonders, how do you bridge that divide? Because yes, you need the technological innovation be brought to the fore. No question about that. But at the same time, you have to counterbalance it with systems that probably are in transition or persons who are not as sophisticated. So it's not a it's not a binary choice at all.
Yeah, well, I think that, well, to start with, Melissa was perhaps a storm or hurricane once in a generation or one in several generations. So that's one.
We hope so.
Yeah. So secondly, Joe, I think it's not, when we think about, we talk a lot in the Caribbean about climate resilience, right? But we don't talk about technological resilience. And therefore,
Quite
when
so.
we build digital infrastructure and digital infrastructure systems, that they must also be closely connected to the risk, included the climate risk that would happen in a place like Jamaica or anywhere in the Caribbean. So that's one point. Secondly, the importance of having alternate and backup plans and systems, I think, are really critical and important. Thirdly, I don't think you can give up on technology as a consequence of that. What you need to do, what it tells me and what it tells most people in this space, is that you need to rejig and to think about that climate resilience dimension of your technology and technological platforms and use and having alternative options as well. I think what it tells me as well, Joe, is that how do you use technology to deal with some of these disasters? Okay, to take, for example, I spoke about what they're doing in Rwanda using AI to help them with respect to the supply of medical equipment and medicine in their hospital system. How are we using AI to do something similar in the Caribbean with respect to the provision of foodstuff or disaster supplies in case of an emergency? I would say in most of the countries we are not. Maybe yes in Jamaica. I don't know. But this is like an example that we need to learn from to build further resilience and have a technological infrastructure that could withstand these disasters. It doesn't say we should toss it out of the window. It tells me that we need to rejig, we need to do it better, and it really emphasizes the need to do things differently as well, because the older models, they're high cost, they are not as effective, and they need to be tossed out of the window, but of course to be replaced with something robust and resilient. And what we also need to do, we need to drive public investments in that space as well, because the private sector isn't crowding into that space. So I think that's an important area for public policy intervention with respect to technological resilience, and having a framework, a policy framework for that, which doesn't exist anywhere in the Caribbean. Our emphasis, Joe, the great time you served doing fantastic work at CARICOM, you would know the issue of technological resilience. I have never been to a CARICOM meeting where that matter was discussed. Doesn't mean it's not necessary, but Melissa proves more than ever that we need to focus on that as well.
No, indeed. And one of the things that strikes me with that point that you're making there is that it also points to the need for how should I say it now? A kind of is digital transformation, but the digital transformation that is mired in effective balance, right, between the various groupings within a society. And part of the challenge that I'm anticipating is that the levels of sophistication, one, are not there in terms of treating with some of these issues. Two, what we are looking at in a number of the areas is that we are not having effective access to the technology. So, for example, a number of the large telecommunications providers have been long arguing that, for example, a 5G solution in a number of the countries is not economically viable. But the truth of it is that whereas we are in the Caribbean, by and large, I think Barbados has just gone 5G. I know Bermuda has it as well. But for most of the Caribbean, what you have is a scenario whereby we are either in 4G, in some countries are 3G, But then you have Germany and others talking about 6G and the Asian countries looking at 7G. So, in other words, to me, the technological divide is widening, and I'm wondering, how do we treat with this in the interim, given our challenges in terms of finance? And you raise the point that we have severe fiscal challenges right across this region. How do we treat with this, even as a public good, even though we recognize that it is necessary?
Yeah, but as I noted earlier, Joe, that public policy needs to be used to drive capital flows, private capital flows. And we don't have that incentive framework to crowd in investment at scale. So this is a good example and a good space where couple countries coming together, Trinidad and Tobago, Jamaica, for example, uh, another country in the region, maybe like Barbados, working together to get investment at scale because that's the challenge. The companies are not seeing the scale required to earn money. So two things we need to do. One, use public policy to create the incentives, and two, work together to generate the investment. But I just want to make another point, Joe. Oftentimes, we in the Caribbean, when we think about technology, we think about information and communication technology. What we have learned in our experience at the UN Tech Bank for LDCs is that technology is also about improving the way that you do business, improving the way that you do things. It's also about innovation. Interestingly enough, in the work that we have done largely in Africa, because 32 out of the 44 least developed countries are in Africa, the biggest demand in terms of like the technology needs assessment we would do is how could we use technology in agriculture, for example. Okay? Nothing to do with information and communication technology in the very traditional sense. So I can give you an example of of Mauritius. Mauritius is a better example, a small island developing state similar to us in the Caribbean. Mauritius, for example, they still have a big sugarcane sector. They are using the artificial intelligence and drone technology to collect data, to look and see where they need to put nutrients, where they need to pay more attention to, where the weeds are. It's some extraordinary what they're doing. So meaning, we spoke about acute fiscal constraints, Joe, but how they're using technology in the agricultural sector is they are able to do more, with less, by having a forensic focus on the areas they need to treat with and focus on the sugarcane sector. In Uganda, in the health sector, they're using AI and drone technology to see where the areas where the mosquitoes are breeding more. So rather than spraying across the board or treating with the mosquitoes across the country and not having an impact, again, they are able to do more with less by focusing on the critical areas where they can have the maximum possible impact. So when we think tech and innovation, of course, ICTs would be absolutely vital and an integral part, but it's not exclusively associated with the ICT sector. So when we think about the vision of reducing the food import bill by 25% this year, by the year 2025, I understand it has been extended, right? But my point is that technology has to be an integral part of that vision, because if you don't use technology with limited land space, it's difficult to produce the food requirements of Barbados, 265,000 people, 1.2 million tourists coming a year. Therefore, it's not possible. So tech and innovation, we have to look at in a much more inclusive and broader way, I would say, of which information and communication technology should be just one integral part. And how we use tech and innovation to help drive transformation in the key sectors that can make a difference. A good example is in the Bahamas. In the Bahamas, they have something called Junkanoo AI. I thought it was like the carnival, and the Junkanoo. But no, Junkanoo AI is a technology that they are using in the Bahamas with tourists that could explain coral reefs and being their friend while people are diving,
Um,
and
okay.
explaining the ocean resources, helping people to contributing to people learning more, having a different experience as well. So it's about having the vision one, but vision without action is zero, right? And
Yeah, of
when
course.
in my
Okay.
time in the Caribbean, I always said, uh, less talk, more business. So there
Yeah.
are ways of us that we can use tech that we haven't started thinking about that. So we need to really push the envelope. Melissa, I
Oh,
like what you have said, teaches us valuable lessons about doing things differently as well.
of course, of course, of course. But they see the part of the challenge that I'm continuing to have though is that I do see pockets, but small pockets of what you're speaking about occurring in several parts of the Caribbean. So, for example, in Belize, for many years now, Belize has been using drone technology in at least parts of their agricultural thing. But I do not see, what I don't see is the investment at scale. I do not see that type of broad engagement. Yes, it happens in pockets. It happens, I suspect, in parts of Jamaica and so on. Because even when you look at drone technology and GIS systems, you can be looking at things that can help you with land titling, right? These things and these things are perennial problems right across this region. No question about that. But
So
the thing is simple this that I don't understand. Is it that there isn't the will to do it? Is it really just a matter of finance? Because you're right, you don't have to do you can do less with how you gonna more with less. Right?
yeah,
What is the challenge from where
yeah,
you sit?
yeah. So I look at 44 least developed countries, right? A population of
Right.
1.3, 1.4 billion people. And even
Mhm.
among the LDCs, you see a divide. But in my years in development, working in these countries, Joe, I think the first step, right, is to have the vision. The second step is to have the will. Third step is to establish a structure or architecture. So like in places like Rwanda, Mauritius, they have ministers responsible for artificial intelligence and technology whose only job is to scan the globe, see what's cutting edge, and introduce the best innovation that exists out there. The Trinidad and Tobago I saw recently, they have established a Ministry of Public Administration and Artificial Intelligence. I don't know the details of the ministry, but I would say that's a good first step, a
So,
good
yeah,
signal. Because when
yeah.
you put in place that, then at least you can allocate not all the resources that needed, but some resources. So you have a start. But if you don't have that structure, then things are happening in a really haphazard manner. So to my mind, that government leadership and direction is absolutely
Mhm.
critical. Some resources from the core budget is important, and that will happen if you have that structure. And then it becomes easier because you're sending a signal now to the financial institutions, to the development partners. This is a direction you want to go. This is a template
Mhm.
Bangladesh has used. This is a template Mauritius has used. This is a template that Rwanda has so successfully used. So it will be interesting to my mind, to see the elections that are taking place in the Caribbean now, the extent to which we're going to see that focus, right? And that recognition of the place of technology and innovation at a ministerial
Yeah.
level appointment. There are some countries, in Brazil, for example, they have a technology ambassador. So some countries
Okay.
now are connecting tech, right, with diplomacy. And that technology ambassador of Brazil, his job is to scan the globe, go and meet Google, Facebook, whomsoever, and bring investments, private investments, because Brazil
Yeah.
has given it a special recognition. And I think these signals, they are not symbolic in nature, they show the steps that countries are making, because Joe, better than I do, given the role that you at CARICOM and elsewhere, that the globe is not competitive, it's hyper competitive. So for us
Yeah.
in the Caribbean, we can't just be competing. We have to be continually thinking about being ahead of the game. And I think that's where we
Yeah.
are lacking and lagging, to be honest.
No, those are fair points, and I would like to take it one step further because a couple of things it seems to me that one, I think our legislative backbone in this area, when we're looking at the whole matter of technology and development, frankly, along that continuum, I think that's where one we are sadly lacking. Because regionally, I am unaware as we speak of there being, for example, a policy on artificial intelligence.
There is none.
I mean, yeah, so
Yeah.
that's was one area, and another area is, of course, something that I raised publicly. Is the whole issue of disinformation, public mischief, digital, how to treat with some of the digital malfeasance that occurs. So, for example, the deep fakes, all the adverse aspects of it, which I don't know, probably it's human nature, but people seem to gravitate to that first before they
Yeah.
use it for the most productive
Yeah. So
enterprise.
yes.
And I'm one, yeah.
Yeah, no. So, Joe, that is precisely why you need to have that policy framework firstly in place, and you have an architecture, a minister, high level official, whatever, leading that charge. Because what is happening in our region is that we keep reacting. We keep reacting, and we are
Mm-hmm.
not being
Absolutely.
proactive and putting in place the framework, the legislation that would be required for us to lead the charge and to give it the highest possible recognition, either at the ministerial level or placing in Uganda. If I may just digress for a moment, so we
Sure.
are about to start a technology needs assessment in Uganda. I met with the Prime Minister 2 months ago, and so they made that request. And tech and innovation in Uganda is in the office of the president. So when the head of that institution calls Minister X, Y, or Z, he has the authority of the president to speak. When they
Yeah.
engage with a development partner, they understand that this is really serious business. So that's the level that we need to escalate this fundamental issue that could really drive transformation in our region if we are to succeed.
Mhm. Well, the irony of it, that as we continue to speak on this matter, is that when you look at, for example, when you look at a country like Estonia, they have been now, I would call almost the poster child for some of the digital government, some of the advances, frankly, needed. But yet still, if we speak about it, we admit that this is where we want to go, but somehow there is that there's something with what happens in the last mile that we never seem to be able to bridge. I mean, yes, I'm aware that, for example, I believe in Jamaica they have a ministerial portfolio that treats with the technology and so on. But the honest truth of it is that it's that last mile that I'm not seeing. We're not implementing, we're not bringing the things to fruition. We're speaking a lot, but we're not
Yeah.
learning really.
Yeah, well, what I can say, I mentioned Rwanda because it's a really good example. Within
Mm-hmm.
a lifetime, they have transformed the country after suffering a terrible genocide. Okay? Um, then the Rwandans had a genocide. They had minimal or no money. Okay? But they had vision. And they have a leadership that backs vision with action. And to be successful, either the governmental level or the organizational level, it's not about everybody being brilliant at the same time, or in fact, not even having brilliant people, but doing the things that are needed, right? Consistently, all the time. That's the recipe to my mind for success. And Will can't be at the stage of ribbon cutting. Will has to
Mm-hmm.
be throughout the stage of implementation. And I think,
Absolutely.
but that is also closely connected to policy continuity. But I am not pessimistic about the Caribbean. I think that I spoke about the Jonkanu AI. I mean,
Right.
in the Santo in the Dominican Republic, they are using AI in terms of treating patients, reducing the cost of going to a doctor, I think, by 40%. So things are already happening. The big challenge really is the recognition, having the policy framework, and taking the action consistently over time. I don't think the solution is only in that public space, but is also in getting investors at scale. And you
Right.
recognize a challenge given the fact that we are largely small countries. But that's like an area where a couple of the countries need to come together instead of being competitive to really use and leverage the regional framework. Not everybody, because to get everybody to agree might be difficult, but to get
Mhm.
those who are in agreement to move forward to get those investments, I think would be really vital, and to work collectively. I mean, Jampro is a really good institution. You have Invest TTO to Trinidad and Tobago, you have Invest Barbados. Why can't the three investment promotion agencies work together in that tech and innovation space? Because individually, they don't have the volume. Collectively, yes, they can make the case.
Yeah. No, good point. Well taken. But we may take you back to Rwanda in this regard. Because I'm curious, part of the challenge that we are having, I suspect, in terms of the adoption of technology and so on, is the whole matter of, I just call it the age divide, matter of age, people's familiarity with it. So we do have a sizable population that is still I would call it over the age of probably 50, right? 40, 50. And for some of those persons, they are not as technologically sophisticated as one would sometimes hope for. Now, the question is, in other countries, when they had that issue, what was the kind of, I suppose, public education, what was the kind of engagement that really facilitated the effective transition to this technological space to carry people into the modern world?
Yeah. The example I would like to use is Kenya, right? Because I served in
Okay.
Tanzania next to Kenya, and they wanted to do a payment system, Joe, right? I think it was the
Mhm.
first or one of the first payment systems in Africa. Um, and what they said, this has nothing to do with government. This has nothing to do with public institutions. This has nothing to do with big business. This is for you, the small business people, and the regular folks in Kenya. And they came up with this M-Pesa system where they started to use a telephone, okay, to make payments. So gone are the days when you had to go to the bank, okay, line up and wait. And I mean, many parts of the Caribbean, you could spend half the day at the bank. Line up, wait, make payments at the bank. So with this payment system, they marketed it as a tool that could improve lives and livelihoods and enabling people to do business. Now, nobody in Kenya really goes to the bank. People would go, of course, right? But all their payments are done, whether it's for their mobile payments, their utility payments, to transfer money, to receive money. And they didn't have a formal education program. They had a marketing blitz and campaign about why this is good for you, because oftentimes it starts with the individual. So I think that when we think about technology, it's about low cost, high impact, simple technology that can make a difference in the lives of regular people. And I understand that there is a percentage of people who perhaps it would be difficult, but I think it would be much more useful, and people are willing to learn and people are willing to adapt once they recognize and see the value it would have for them. So that's the experience I saw in Kenya. In Rwanda, it's the same, whether it's in the health system, whether it has to do with public payments, citizens see the benefit and value of it. In Ethiopia, farmers are using the same mobile technology, not well-educated people in the classical sense of education, but they are using the mobile technology and artificial intelligence to get information on weather patterns, whether it's going to rain, how to, and what preparation they need to do, when may be a good time to
Yeah.
plant. And so it's about using the technology to start with in a simple way that could make a difference. And that has allowed these countries, both Kenya and Rwanda as an LDC, to really leapfrog, because wealthy countries, people from bigger countries are going to Rwanda fascinated by what they have done. In Eritrea, another LDC, they have asked for us to help them with the establishment of a payment system because none exists. And obviously, the first part of the project, as we envisage, is to take Eritreans to Kenya to see what the Kenyans have done. They don't have to go to Europe, right? Or they don't have to go to North America. They don't have to go to a Republic of Korea, sophisticated country in terms of technology, right next door in Kenya. So they are very, very good models. So it's political will, it's about simplicity and what's in it for you, Joe, or what's in it for me.
No, indeed, indeed, indeed. But you see, all right, from where you sit, your vantage point, what are the skill sets that you see emerging now as we look to the future of work? What are the skill sets that you see emerging? And of course, counterbalance that with your own experience in the Caribbean. Where are the areas that you think we need to be really boning up on as a
Yeah.
region to really take advantage of the technological innovations?
Yeah. So Joe, the kids who are going to primary school now, okay, the jobs that they will occupy or have 15 years or 18 years from now wouldn't even exist, right? Doesn't exist. Doesn't exist now. Those jobs don't exist now. So that's one point. Secondly, we know as night follows day, most would be in the tech and innovation space. That we know. And therefore, the sectors where there would be massive demand would be in that tech and innovation. So think BPO, where Jamaica's had a lot of success, okay? Not
Right,
BPO
right.
2.0, but BPO, business process outsourcing 9.0, where our educated people need to prepare themselves to render services and to be building capacity and working on apps to service that technological revolution that's raging, and where the cost of servicing that technology in Europe and in North America will continue to be extremely high. So it's not so the future for the Caribbean, because we already have an educated workforce, but it's about preparing them for this technological era that's continuously transforming, that would be even vastly different 10, 15 years from now. So how do our universities, University of the West Indies, centers of excellence, build programs and degrees that can respond to these jobs that would be required? And these jobs I'm talking about would be, as of now, high-paying jobs. That's how India succeeded in their own Silicon Valley in Andhra Pradesh and in places like Chennai, okay, by having software engineers. So for us, it's about preparing our people for the opportunities that will arise, for which, to be quite honest, we are not prepared, because we are still thinking very traditional type investment, hotel sector, which is needed, tourism sector, which of course we must continue, but we are all competing for the same sun, sea, and sand offer. And therefore we need to press that reset button, because even in the tourism sector, I spoke about Junkanoo AI. How do you have an experience using technology that's totally different from what obtains and what is provided now?
No, indeed. Indeed. And on that note, Deodat Maharaj, we have to stop and for this time. That's Deodat Maharaj, who is the Managing Director of the United Nations Technology Bank for LDCs. Thanks so much, Deodat, for your time. I mean, next time we speak, we really have to look at where AI is going and the cost for investment that will create. But thank you so much, my friend. Good seeing you.
Joe, thank you. A great pleasure. Look forward to speaking with you again. And as always, engaging with you. It's a lot of fun and I learn a lot. Thank you so much. Goodbye.
Thank you so much. Good.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
This is a Market Watch on the Caribbean Business Review. I'm Joseph Cox. Jamaica begins this week with mixed economic signals. The PIOJ confirmed 4.6% growth for July to September, driven by a 10% surge in goods production. Stopover arrivals reached 535,000. Unemployment sits at 3.3%. However, Hurricane Melissa is expected to trigger an 11 to 13% contraction in Q4, with the PIOJ projecting a 3 to 6% decline for fiscal 25-26 and a 3 to 5 year path to full recovery. The Bank of Jamaica continues to stabilize the financial system, injecting $3.9 billion in emergency cash, waiving penalties through year-end, and removing RTGS fees on over 240,000 transactions to address severe banking disruptions in western parishes. ATM availability is still only 31% in Hanover and 38% in Trelawney, while Kingston is fully restored. With inflation expected to exceed 4 to 6% target until 2027, the policy rate remains at 5.75%, and the BOJ has sold $210 million to steady the FX market. Across the region, several major policy developments are underway. The Cayman Islands recorded a 10.4% rise in Q2 imports to $434 million, driven by population growth and higher U.S. prices. A new Transparency International UK report has given Bermuda an F for beneficial ownership accessibility nearly 7 years after committing to reform. In the Bahamas, unemployment has fallen from 10.8% to 9.3%, with nearly 3,900 new jobs added. Belize's trade performance remains mixed. Imports rose 8.6% in September, exports increased 4.7%, but year-to-date export earnings are still down 8.7%, driven by steep declines in sugar and molasses. In Barbados, stay-over arrivals reached 537,000 for the first 9 months, long-stay arrivals grew 5.5%, cruise visitors surged 31.5%, and tourism value-added expanded 9%. Guyana has injected nearly $1.5 billion into the banking system this year, 4 times last year's level, to stabilize FX availability amid rapid private sector expansion. In Trinidad and Tobago, Governor Larry Howey warns that bi-weekly FX interventions averaging $100 million are becoming unsustainable despite $4.6 billion in reserves, prompting a shift towards structural reforms. And finally, Haiti's IMF program has been extended to September 2026, with reserves now nearly $1.5 billion, though the economy remains under pressure with 32% inflation and a 7th consecutive year of contraction. Before we wrap, here's a quick look at the regional currencies and market performance. CARICOM exchange rates remain broadly stable, with the Bahamas, Barbados, and Belize maintaining their long-standing pegs, while Jamaica trades at 161.20 to the US dollar, Trinidad at 676, Suriname at 38.81, and Guyana at 218. Haiti's gourd traded at 131.39. Across the Caribbean stock markets, the JC index gained 0.89%, while the All TNT index slipped 0.9%. BSC, BSX, and BISX and the ECSC remained relatively flat. Top gainers this week were Jamaica Stock Exchange up 13.59% and CPJ Limited up 12.8%. Top losers were Margaritaville Turks down 15.27% and Cygnus Real Estate down 15%. Now that's it for your Market Watch. I'm Joseph Cox. Global Pulse is up next. This is CBR. This is Global Pulse. I'm Joseph Cox. We begin in Mexico, where the Bank of Mexico has cut its 2025 growth forecast to 0.3%, down from 0.6%, as weak domestic demand and soft regional trade weigh on activity. In the U.S., jobless claims fell to a 7-month low of 216,000. Retail sales rose 0.2% in September, and the U.S. deficit climbed to $284 billion in October. But record tariff revenues, up fourfold year-on-year, helped offset some fiscal slippage. Meanwhile, core capital goods orders rose 0.9% for a second month, lifting the Atlanta Fed's Q3 GDP estimate to 4%, while bank profits jumped 13.5% on stronger fee income and fewer loan losses. Turning to Canada, policymakers are tightening import quotas on steel and lumber as 50% U.S. tariffs squeeze margins, while offering freight subsidies and liquidity aid to cushion the blow. At the same time, Canada narrowly avoided recession. Q3 GDP grew 2.6%, boosted by oil exports and public investment. In Europe, UK Chancellor Rachel Reeves unveiled a £26 billion tax package, extending threshold freezes and adding new levies on high-income earners and luxury properties to close a £22 billion fiscal gap. Across the continent, Germany's consumer sentiment improved slightly ahead of the holidays, but weak income expectations continue to cap spending, while the European car market rose 4.9% in October, driven by booming EV sales and a 206% surge in BYD deliveries, even as Tesla sales dropped nearly 50%. In Asia, Japan's services prices eased to 2.7%, hinting at slow inflation momentum, though labor shortages persist. India's economy surged 8.2%, the fastest globally, but faced new headwinds as U.S. tariffs drives exports down 11.8%. And in China, exporters are grappling with softening global demand. Shipments to the U.S., which have plunged 25%, though Beijing's recent tariff truce has trimmed China's effective U.S. rate from 43% to 33%. Finally, the WTO warns global trade momentum is fading. The goods trade barometer slipped to 101.8, reflecting front-loaded exports, slowing freight, and rising tariff uncertainty. Turning to the markets, oil prices softened across the board. WTI crude slipped to 58.55, down 0.17%, while Brent fell 0.78%. The OPEC basket eased 0.35%. In contrast, natural gas jumped 6.41% to $4.85, extending its recent volatility. Equities were broadly positive. In the U.S., the Dow rose 0.61%, the S&P 500 gained 0.54%, and Nasdaq climbed 0.65%. Europe also edged higher with the FTSE 100, DAX, and CAC 40, all posting modest gains. Asian markets were mixed. Japan's Nikkei added 0.17%, while Hong Kong's Hang Seng slipped 0.34% as tech shares lagged. Well, this has been Global Pulse. I'm Joseph Cox. This is the CBR. Well, that's a wrap on episode 12, season 2 of Caribbean Business Review. Thank you so much to our loyal audience across MKR Radio and all digital platforms for your continued support. As always, we live by our mantra, knowledge is strength, but information is power. A special thanks to our guest, Deodat Maharaj, Managing Director of the UN Technology Bank for LDCs, for his strategic insights on the Caribbean's readiness for artificial intelligence. Key takeaways: innovation starts with a clear national vision and the political will to execute it consistently over time. A formal government architecture, dedicated ministries, clear mandates, and coordinated leadership turns ideas into sustained, coherent outcomes. Countries like Rwanda, Mauritius, and now Trinidad and Tobago show that dedicated AI or technology ministries accelerate national transformation and signal strategic intent. And innovation fails without structure, and when the structure is missing, progress becomes fragmented. Long-term results require long-term strategy, not pilots, improvisation, or complexity. Now, please remember, our new CBR intelligence notes are released every Wednesday, providing deeper midweek analysis on the biggest economic and policy issues across the region. Also, remember that you can listen to this broadcast at your convenience on Spotify. The latest edition of the Caribbean Financial Dispatch is live on LinkedIn, WhatsApp, and LinkedIn, the YouTube comments. To subscribe, please email us at caribbeanbusinessreview@gmail.com. Don't forget to like, share, comment, and subscribe, and follow Caribbean Business Review on TikTok, Spotify, YouTube, Instagram, X, and LinkedIn. Until next week, same time, same place, I'm Joseph Cox, and this has been CBR.